everyone, welcome back to the Happy Investor podcast. And today we have our lovely guest, Katie Eatonton. Welcome, Katie.
Hello, and thank you for having me.
Thank you for coming. How are you doing today?
Really good, really good. It would be nice if it was nice and sunny outside, but
I know, I think we're all over the winter now, aren't we?
yeah, definitely. I'm over dark.
Yeah.
Although I have noticed it is still light at 5 o'clock.
Okay.
Any of the people listening to this later on in the year, it's January.
Yeah, it's January and we want it to be summer already.
Definitely, definitely.
So, for my listeners who don't know you yet, can you introduce yourself, tell us everything you've been up to and what you do at the moment?
Okay, so I won't tell everything because we'll be here forever. My day-to-day job and career and passion is working in finance. I am a mortgage and protection advisor. So I help people buy their dream homes and or investment properties, build their portfolio, provide that security for the future. It's kind of my day to day and why people come to me. But what my absolute passion is at the moment is making sure that the whole of the UK has a will, has a lasting power of attorney, and has some form of protection for themselves, for their income, for their family, and don't ever need to rely on crowdfunding or GoFundMe or the government to sort out their troubles if they can't work or they get sick or die.
Yeah,
So that's
which
that's where my
will
head's
happen
at
to
for
all of
this year.
us.
Well, exactly. I was actually at a speech yesterday about AI, and apparently we are going to live forever at some point, but we don't at the moment. We do die, and it is a given. And so everybody needs a will, and everybody needs to really think about what that looks like for their family when they do. It's not as easy to say, well, they can sort it out. I'll be dead. I don't care. Because actually, if you could decide what their life looks like after you die, I think you should. And that's what I've been doing for 22 years.
Amazing. So, how did you get into finance and becoming a broker?
I was working for a property developer many, many moons ago, and he had a mortgage guy in the office. He had a building company that did the refurbs and the builds, and then I used to go out and source the properties for him. So I was working with him for a couple of years. I kind of became um, the head of the building side, the development side, started progressing the mortgages. So I was basically running everything. And then I got pregnant and worked up until I was still working when I was in hospital giving birth. And basically I was his right arm. His business couldn't survive without me. So the 3 months mat leave that I had, he had to employ other people to fill the space that I left. And when I went back, he didn't have a job for me. So
Oh,
he had actually paid for me to do my CMAP exams. So I thought, okay, well, I'm here with a baby, 3 months. I'd split up with her dad. I was living at my mum's, and I thought, right, I need to work this out. So I did my exams, and I've been running my business since then. So
amazing.
turned what was a really shit situation around, and yeah, I absolutely love what I do. I've looked at how I can use my knowledge into various other guises, mentoring, coaching, debt management, budget, helping people release these dreams that they have. And it always comes back to this. I love this. And like I said, my passion now, I I see so many people that don't have simple things in place, and they only realize that the shit's hit the fan when it's actually hit the fan. So
Yeah, yeah. So, do you think most people don't have a will?
I would say, yeah, definitely. I think it's something like only 30% do have a will in the UK. Yeah, so it's a really low percentage. And just to give you an idea in real time, I did a talk last year and the room was full of business professionals, business owners, and I asked everyone to put their hand up if they had a will and half didn't.
Why do you think that is?
I think it's either it's not going to happen to us, we don't want to think about it, it's going to call on the inevitable. It's an uncomfortable conversation, especially if there is blended families. So previous children, previous relationships, um, previous wealth. And I just think we are this kind of society now that we expect other people to just pick up the pieces and deal with our crap. And it's so easy to do. It's not a difficult thing. And just a little kind of disclaimer, everything that we discuss, I can do all of it. So anyone listening, please, if you've got any questions, then come to me about it. Yeah, I think men are the worst. Men don't want to talk about anything negative because they are never going to die. They're never going to get sick. Um, but then on the flip side, women rely on the men to deal with it all because men tell them, "Oh, I'll look after it. Don't worry, I've got you. I'll
No, we
sort
can't
it
have
all
that.
out." Exactly, exactly. So basically, everyone just needs to give their head a wobble, have a shake, and just deal with it now, and then it's done. And then the only thing you have to do is update it when you get richer, or you buy more property, or you have more children, or things change.
Yeah.
That's the only time. And if you have a child and you love your child, you are doing them a disservice if you don't have a will. You don't need to have anything else. You don't have to have any money. You don't have to have a house. If you have a child, you should have a will because you need to tell the powers that be what you want to happen to that child if you die.
Yes.
If you
Yeah.
don't, they will go into care.
That's what
Obviously,
triggered me to do it, and when
yeah.
we had our kids, I was like, "Right, I think now we need wills, let's do it." And it was so easy. It was so easy. Had a chat with someone, they broke down the really important things we needed to decide on, and it was
Uh-huh.
done, and it
Yeah.
wasn't that expensive.
And do you know what? Insurance is the same. People think that that's complicated. If you've got someone that's passionate about it, that is genuinely looking out for you and for your family and looking long term, not just, what your income does now. What does that look like when you compound that income over 20, 30, 35 years? It's not as easy as just getting a simple little policy to clear your mortgage. You need to think about what your income's going to do over all of the years you're going to be earning. What does that look like? It's not just right now, because if some people can never work again if they have a heart attack or they have a stroke. So 1 year's worth of income isn't going to be enough to do all of the things that you wanted to do with your life. People were living longer. Apparently now it's going backwards because of illnesses and whatever. But at the end of the day, we're all getting older, we're all going to die, and we've got a responsibility to look after ourselves and not rely on other people to do it. And I think actually, when people say, "Oh, my mum and dad will sort it out," if as advisors, we pushed more on mum and dad and said, "Well, will you actually sort it out?" We'd probably realise they can't
Mm.
because I'm 50, if I get ill, my parents are in their 70s, they're not working. How are they going to sort out my mortgage and pay my bills and look after my children? They're not. So it's time that we all got a little bit, we started adulting a little bit more, I think.
Yeah, we really do. And I think this is the kind of thing you're not taught about in school. We're not taught about finance, credit cards, mortgages, anything like that. So, what is your ideal position for someone to be in? If someone comes to you when they're, say, 20 years old or 30 years old, what
Mm.
are you going to sit down and say, right, this is what you need in place and this is why?
I think even before that, I need to understand what they want and what their plans are for their life because not everyone wants the same thing. Not everyone wants to own a home. Not everyone wants to get married and have 2.4 children. So insurance, I call it a protection portfolio because it is based on you. So there's a lot of time spent at the beginning understanding what your hopes and dreams are and putting a plan in place for that, which then kind of helps with when people come for a mortgage, you kind of know they want a house, but then what next? So I think people need to look at it as a must have, not a nice to have. I hope that nobody ever claims on it. I hope it is the biggest waste of money that people ever spend. But I guarantee you, if it's there when you need it, you're not going to turn around and say, I really wish Katie didn't do that for me.
So this is life insurance.
Life insurance, income protection, a will, any of the above. Even car insurance. Yeah, no one wants car insurance. We get it because it's the law. But I guarantee when you crash your car,
Yeah.
you're happy that you've got it because
Yes.
they deal with everything. And it's the same with insurance. You know, you contact your advisor, you contact the insurer. Obviously, with my clients, I say, contact me first. You've got enough to deal with. If you are at the point of a claim, you've
Mm.
got enough to deal with. You don't need to be dealing with the provider. And they kick in and they deal with all of the rest, the medical stuff, the diagnosis, speaking to your doctor, sorting out the payouts. I just think people need to have a more of an open mind and an understanding of what insurance actually is,
Mm.
and also how bad the NHS is, and benefits and sick pay. And yeah, it's not someone else's responsibility to sort out. It's not your employer. It's not the benefit system. We need to take responsibility. You know, if you want to get in a massive debt, which a mortgage is, let's be honest, it's the biggest debt you're ever going to get in.
Yeah.
If you're prepared to get into a massive debt and you know that you need to use your income for that massive debt, that's what the lender assesses your affordability on. If you're prepared to get into that massive debt, then you should have a backup or something in place to clear that debt if
Yeah.
your income goes,
That
because
makes sense.
the lender's plan B is they'll just come and take your house.
Yeah.
They don't care that you're ill. They want their money back.
Yeah.
So, you know, I just think as a society and as advisors, we need to do better. We need
Mm.
to educate people what is out there, and it doesn't have to be really expensive.
Yeah.
There's some amazing policies out there that you can get as cheaply as £15.53 a month, which would
Wow.
which would give you a little bit of life insurance for a fiver, but the £10.53 that you spend on the bolt on, the add-on, will give you £2 million worth of cancer, cardio or neurological cover, which is better than private healthcare. This
Mm.
particular provider, it's only available through brokers, so you can't go and get it on Compare the Market or Meerkat or whatever. You need to speak to someone that understands and can explain it. I think that's the biggest thing.
Yeah.
I've had clients when I've caught up with them for an annual review or when their next mortgage is due. I'm like, how's things going? What's been happening? Oh, I had a stroke. What? What do you mean you had a stroke? Yeah, why didn't you tell me? Oh, I didn't want to bother you. And they could have claimed, and they still have claimed, because you obviously claim retrospectively. But I just think as an industry, mortgage advisors and insurance advisors, we need to do better. And that's what my real kind of driver is now and going forward, is that people really understand what's available to them.
Yeah.
And it's not that expensive. It doesn't have to be that expensive. And to be honest, if it is expensive, it's because you're more likely to claim.
Mm.
So, pay that money. 100 quid a month or £200,000 payout when you need it.
Yeah, this is incredible. This is absolute gold, Katie. Thank you for telling us this because we don't want to think about getting ill, do we? We don't want to think about getting cancer or something like that. But the stats are pretty
One in
bad.
two.
One in
One in
two,
two.
right? So you're probably going to get ill, or someone close to you is. And when that happens, we're going to rely on the NHS, which is incredible, but completely overwhelmed. Or you could pay 15 quid a month or up to 100 quid a month, and you're going to be covered and you're going to get really good care. You're going to get income protection as well.
Yeah.
Yeah.
Well, that's the biggest thing. If you're self-employed, like so many people are, since lockdown, so many people have set up businesses, realised that life needs to be a bit different. We've got no sick pay. Got no sick
Yeah.
pay at all. The statutory sick pay is, I think, 114-ish a week, but we don't even get that because we're self-employed.
Yeah.
So, you know, that's the biggest kind of that blows my mind is that self-employed people turn around and say, yeah, mm, maybe not now or later, or oh, I'll come round to it. No, that should be when you set up your business.
Yeah.
These should be non-negotiables. And the thing is, if you're a limited company, all of this stuff can be put through the company.
Yeah. And that's really, really beneficial as well.
Yeah, so it's tax deductible expense, and your company works as your employer, so they're like employee benefits. It's the same as if you worked in a company. So
Yeah. Incredible. So, what if someone wanted to come to you and sort their will out, which everyone should do?
yeah,
How much does it cost to get a will in place, approximately?
um, it depends on the intricacies. It depends on what needs to go into it. Um, we have a legal department, so um I don't actually sit down and go through the will. So it's not thousands of pounds, it's probably a couple of £100.
Yeah. And what's the
Um,
benefit of putting a will in place versus not having one?
okay,
Well, what happens
so
after you die?
so uh I can give an example which supersedes a will.
Okay.
Sorry, marriage supersedes not having a will. So if me and you are married or were married and we're now going through a divorce, but we're not married, and you've met somebody else and you're building a life with that somebody else, but we're still married and you don't have a will and you die, I still get all of your stuff.
Get everything.
Not everything. So it's the first 250,000 goes straight to me. And then whatever's left gets split between me and any children that you have
Right.
equally.
Yeah.
So again, if you don't have a will and you've got a little secret love child lurking around in the background that nobody knows about, and they hear that you've died and they think, oh, hang on a minute, I'm going to come for what's rightfully mine. And that can cause a bit of a problem as well because they are entitled to it because you didn't take the time to sit and write a will.
Yeah. I think it's really interesting for, as you say, people with blended families,
Yeah.
people who might be with past marriages but separated, people
hmm
with kids.
Also, you may have a wild, unruly child that's got a bad drug problem or makes bad choices with partners, gambling addiction, that you may not necessarily want to inherit a big, large, massive lump sum of money. In which case, you can appoint a trustee that drip feeds them money, or it's basically your last will and testament. It's what you want to happen if you're not here to control what happens.
Mm.
People think that you could just write it on the back of a cigarette packet and that will stand up. Not really. It needs to be witnessed. It needs to be witnessed. Your signature needs to be witnessed. It needs to be witnessed by two people. Yeah, if you're going to do it properly.
Yeah.
That's what I think. If it doesn't make sense, um, trying to do such important things on the cheap,
Yeah.
like car insurance, third party fire and theft. That's not going to help you if you crash into somebody, it's if we're going to do these things, let's do them properly. People insure their mobile phones. I'm sure as hell that's not going to help you if you're sick. You insure your
Yeah.
TV. I obviously, as a mortgage advisor, we go through everyone's bank statements. And even for insurance, I do it. You need to understand what people's budget is, what their income is, their expenditure. The amount of times I've pushed back on clients who've said they can't afford it, and I go through their bank statement. I'm like, okay, so you spent 100 quid in this bar, you spent
Yeah,
50
you
quid
can see what they're
here,
spending.
you spend £60 a month on your dog, pet insurance. Are you not worth more than all of these things? Or a classic one, husband and wife. Husband's like, I don't need it, don't need insurance, she'll be fine, don't worry about it. Okay. So, husband, you're dead now because you've died. Wife, did you know your husband paid £1,000 a month for his Range Rover and didn't think you were worth £100 a month to insure you? There's so many things that people put more value on
Yes.
than what they should value.
It's
Yeah.
bizarre that, isn't it? It's like we just don't want to think anything bad is gonna happen,
And
and
also,
you can't
if
see
you
the
think
future
about it,
value of that.
it could be 50 quid a month, it could be 100, 200, whatever you want it to be, it can be. And like I said, I hope you never ever claim on it. I hope you live a fruitful, long, healthy life and you never claim on your insurance, and that it has been a big fat waste of time or waste of money, sorry, like every vodka you've drunk, like every rave you've been to. Unless you're making these lasting memories like holidays I think are non-negotiable. But anything else, what value did you get out of that? That's more important than looking after your children or yourself. There's so many of us that are business owners, single. I mean, I'm not single now, but um, have been single mums, young families. Yeah, I've got a responsibility to my children to make sure
Yeah.
that they're okay. And I'm insured up to the hilt. My
Yeah.
insurance every month is over £1,000, but there's absolutely nothing that's not covered. My
Yeah.
mortgage is covered. There's a lump sum left to whoever's got to look after my children. Everything is covered
Yeah. And you
because
mentioned with children especially, if you haven't got a will, then you don't get to choose who looks after your children,
no,
which is insane.
yeah. I mean, obviously, if you're married and you're both the parents, then naturally this surviving person would have the children. But as in so many cases now in the UK and all around the world, that's not the case. There's single mums, dads are not involved. You don't want then the dad to suddenly have access to your child when you die. They know nothing about. So you need to put that. Who do you want to be the guardian? And you need to have the conversation as well. I could say I want my brother to look after my children, and he would be like, "No,
Yeah.
absolutely not."
Yeah.
Um, and they are uncomfortable conversations. You've only got to have them once,
Yes.
and
100%.
then insurance is never going to be as cheap as it is the day you take it out because every day older, you're a day closer to dying. But life changes, employee benefits change. If you're employed, number of children change, marriages, wealth, estates, or you might move abroad, in which case you need to relook at your whole portfolio anyway. Or someone who just wants to travel around and, fly by the seat of their pants and just live, then maybe they're not the ideal client to have insurance.
Mhm.
But maybe their parents want to insure that.
Yeah.
And it's
Yeah.
a good, although, we're not supposed to say it's a good inheritance tax tool, it is a good way to mitigate inheritance tax
Why is that?
because you can, if you know your parents are going to have a massive inheritance tax bill, or you're going to have a massive inheritance tax bill when your parents die, there may be nothing you can do about the estate and the value, but you can take out a policy on your parents that would cover the inheritance tax bill.
What? What? Hang on.
But I didn't say that out loud.
Really?
Yeah, because with inheritance tax, you have to pay it before you can start selling stuff. So you need to beg, borrow, and steal to get that money before you can release any of the assets. So unless you've got that money sitting in the bank, how are you going to do that? Um, yeah, so you take a policy. Anyone that's got an insurable interest can take a policy out on somebody else. So if we own a house together, I can insure you for the mortgage and vice versa. You know, a lot of people buy joint policies, and you could take a whole of life policy for your pay for it for your parents because it's going to be bloody expensive, but it's going to be way cheaper than paying 40% inheritance tax.
That is very interesting because so many people just have to sell everything, don't they, when they inherit things?
Oh,
So
a lot of
that's
people say, "Oh, I don't care. I don't care. I don't care about giving the government 40%." Really? Really? You've given them tax for your income. Every time you buy a house, you pay stamp duty, capital gains, tax on your rent, tax here, tax there. And then after all of that, you want to give them 40%? I mean, you're still giving them 40%, but you're paying for it from an insurance policy, not from actually the asset that could be then gaining you more income or
Mhm. And not
more
having to sell the old family home.
exactly,
Yeah.
exactly. And
Um,
also not leaving that with your children to work out what they're going to do.
yeah. And can you quickly cover power of attorney? Because I don't
Yes.
think people know about this at all. So can you break it
So
down for us?
lasting powers of attorney is near enough as good as a will if it's done properly. Um, there's two types. There's health and welfare and finance. The finance one you don't have to be dead or lose capacity for it to be used. You could just be away and someone's got powers of attorney, like my brother's got powers of attorney over all my bank accounts and everything. And what that does, it means people can make decisions for you financially or access your money or whatever. That's what another thing that people don't realize. If you're married and you have everything joint, which old school people do, when one dies, everything gets frozen. So if your bills are all going out of that joint account, or even worse, husband's account,
Yeah.
the bills will go out of his account and you can't get to it and you don't know what bills he pays, what bills he
Yeah.
doesn't, because a lot of people still don't talk about money.
Mm.
There's still a taboo around money. You know, if you talk about how much money you earn and how much money you spend, and people still a bit like that
Yeah.
about it. When they die, they freeze everything. So then your bills
I've
aren't
got a
getting
joint
paid.
account for our bills.
Yeah, but have you got powers of attorney?
I don't know.
Well,
I
you
need to
should have,
check.
Sophie. So that's the finance side of it. And then health and welfare is if you lose capacity, which so many older people are now, it means the children, if they're the ones that have got the powers of attorney, can make decisions on their behalf. um, so, mum's lost capacity. They want to keep her in hospital to palliative care or whatever. You can then override that and say, no,
Mm.
I'm making decisions for her. I want her at home. Also, if parents like children, so my parents have got LPA, my mum, I think, and my brother are my lasting powers of attorney. If I had a car crash and was in a coma, let's say I'm going to be in a coma for, I don't know, ever, or,
Long
in a
time.
vegetative state for, I don't know what the correct PC way of saying it is, but I'm basically going to have no real quality of life again. And my mum wants me at home so she can care for me at home. She wouldn't, but if she did, with a lasting powers of attorney, she can do that. She can override whatever the hospital or
Mm.
anybody else says.
And if you
Um,
didn't have that in place, it would just
it's down
be
to them. Whatever they decide is best for the person
yeah.
is what goes, even if
Yeah.
you know that's not what's best for them. Um, and some people, just want their family at home to die in their home or be looked after, if they can listen to me. We still
Yeah.
don't know enough about what people can and can't comprehend when you can't speak. So, or can't, if you've lost capacity, you don't know what still triggers stuff. So if they're in a place that they recognize, or they can hear stuff and hear people, you don't know what that's going to do for their end of life. So they're more expensive. You're talking probably £300 to £500. Don't quote me on it. I will get all the exact figures for you, so at least you can add it into the dump into the caption. But wills and lasting powers and trusts, all of them are tools that keep control within our power, that people don't really know enough about and don't use enough. Yeah, don't utilize enough.
Yeah. Amazing. This has been absolutely gold, and I hope everyone comes and talks to you about this. What would you like your key messages from today for people to take away?
I think it really is, stop thinking that everything will be okay without putting a plan in place to make sure it is okay. Um, I think if the last 5 years have proved anything, it's that not everyone's always got society's best interests at heart. And I think we really need to take responsibility for ourselves. And it isn't expensive. It doesn't have to be expensive. And you can always add to it. So just do what you can afford now. And then we'll review it next year and the year after. And, we can add to it as life develops.
Amazing. And it sounds like you can really help people. So you can actually help them understand what they need. And actually, you'll come back to them next year and say, right, is this still the case? What's
Yeah.
happened? Let's tweak
What's
it.
changed?
Yeah.
Have you had any more children? Or, ideally, a client would come to me and say, "I've had another kid. I'm pregnant. I've bought another house." It's a relationship. I build relationships with my clients so they don't leave me.
Yeah. Okay. Well, thank you so this has been amazing. I'm going to go and do all kinds of things after this call. But if
With
people want
me.
to, yeah, with you, yeah, Meg's going to get on another call immediately. um, but no, it has been so useful, and I think we need to talk more about these things. Getting ill, dying, it's not nice to talk about, but it will happen to all of us. And
Mhm.
it's just so good to speak openly about it and be really smart about getting plans in place. So really thank you.
No
And where can
problem.
people find you or contact you if they want to come and have a chat?
So Instagram or LinkedIn are probably um my two main platforms that I use. Um or you can book in using my Calendly link, which is in the bio of my Instagram, which is Katie Eatonton _finance.strategy.
Cool. We will put all the links for this podcast
Brilliant.
so that everyone will have them. Cool. So just to finish off, what are you excited for this year? What's happening with you?
What am I excited for? Getting going with my mission
Yeah.
and getting people protected. I think it's going to be an exciting year. I think last year was difficult for some people, a lot of people. I think it was a year of a bit of a transition, and I think all the hard work done last year will come to fruition in this year. Um, in terms of property, it's definitely going to be the year of the landlord this year.
Yeah.
I think there's going to be some massive opportunities with new products coming out from mortgage providers, with the ways to structure portfolios, and yeah, I think I'm excited for this year. Ask me
Can we
again in
do another
December.
podcast on property, please?
Yes,
Good.
yes. I know. Like I said, I was at a really, really good conference yesterday, and a lot of the speakers were um, big in the buy-to-let market. So a lot of interesting stuff happening there, especially if you want to become a landlord. There's going to be loads of opportunity. So
Yeah.
I'll,
Amazing.
I'll
Yeah,
happily cover
there's
that.
so much going on, isn't there?
Mm,
But we're running out of time, so I'm going to get you back on later in the year.
definitely. Thank you so much,
All right.
Sophie.
Yeah,
All right.
thank you for having me. Thank you for listening, everybody. Goodbye.